on this Mohra Trading Day special. Now a very special guest joins us next, Ramdev Agarwal of Motilal Oswal Securities. Ramdev, firstly a happy Diwali to you and your entire team from NDTV Profit.
Yeah, let me wish the viewers of NDTV Profit a very, very happy Diwali and prosperous New Year.
Right. Ramdev, Diwali is a time to make new beginnings. It's a time when people look to try and make a new beginning in their life. What is the sort of investment advice you would give them? If somebody has not made a SIP, it's still not late. Just go and make a SIP for the next 20 years and that your Crorepati formula would still be valid?
Yes, yes. I mean, see, one is never late to start. I mean, but then the big journey starts with the starting only. So I think investing and making money is not a overnight game. I mean, as it is made out to be, it's a long-term game, and you got to have faith in the. You have to be optimist, and you have to believe in the power of compounding. Because at the rate of 25%, a rupee becomes 10 times in 10 years, 100 times in 20 years, and 1,000 times in 30 years. So knowing this simple thing, and then investing in such a way that you compound your money over a period of time, I think that's the way to go about it, and nothing can come on the way from making very large fortune out of very modest amount of money.
Right. As far as investing into mutual fund is concerned, if a person has a very long-term view to invest in terms of a SIP or starting a new beginning, still multi-cap and mid-caps offer more value than large cap on a long-term basis?
I think if the investor is not particularly inclined to buy a mid cap or large cap, I think the best thing is to find a fund manager and give a multi cap mandate, so that let the fund manager decide how much of the large cap or small cap and large cap mix he wants to have, because it is today mid caps are doing very well. I'm quite sure. I mean the performance gap between large cap and mid cap is very high. At some point of time, large cap rally will start and mid cap will not do as well. So over a long period of time, you'll find that gaps are not as much as it looks to be in the last 12 months. So let this entire fielding be done by the fund manager, and you just sit and watch. Over a 5, 10 years, 15 years period, I don't think any cap matters that much, in the sense that there could be a gap of percentage or two, but a good manager would take care of everything.
Right. Last year to this year in the large cap space, the Nifty return would be just about 10% and gold returns were about 17%. You think gold is looking more attractive? Of course, you love equities and you would always want equities. But with the uncertainties rising globally, you think gold is also looking good?
No, for me, gold is a waste of time as far as the investing is concerned. I think we should look at best, if somebody wants a inflation beater or some kind of safety, liquidity, store of value. In that case, fixed income is much better. Go and put your money in the next door fixed deposit, or maybe you buy a debt mutual fund. So that's the portion which you must put into a debt side, and then balance you must put in equity. Whatever portion, 25, 50, 75, whatever you want to put in equities, whatever is your risk appetite. So I would think that keep it simple. The wealth management is very simple. Let's not complicate it. Decide your allocation between equity and debt, and just go about doing it. Find the managers and they'll do the rest of it.
Right. What would be your top themes or top plays for this Samvat 2073?
It's all about, you see, what has happened is that it's not a very broad, what we are used to in 2003 to 2007. Anything you touch, it used to fly. It's not that kind of situation. It's not overheated market, or any and every stock is not doing well. There are very few stocks out of 3,000 listed stocks. Probably 300-400 stocks are doing very well. And how do you get to them is extremely important. How do you find them enough in your portfolio is the key to success. I mean, you might get one right, but 10 wrong. But I think what is required is that your portfolio should have enough good companies. So for that, the themes, I mean, what is recurring theme is clearly, 25-30% we put in private sector bank and NBFCs. We put in consumer companies, some 15-20% depending on availability of ideas. We put another 20-25% in automotive side, which is consumer as well as durable and slightly cyclical and sensitive to the interest rate declines. Then you have pharmaceutical companies, wonderful pharmaceutical companies which are beating the world in terms of their what they're exporting in generics and all. So like this, you have to build a portfolio, and it depends on your skill of what are the businesses you understand. We are comfortable with what I said. These are all disclosed portfolios, and we run a very concentrated strategy. So we never have more than 20 stocks in a portfolio which must be representing 7 to 8 businesses, or maybe even 10 businesses. We typically buy the leadership companies. We buy fast-growing, high-quality. We follow the QGLP process. So you have to have your investment philosophy, find the ideas, and just build a portfolio. I think it will do very well.
Right. Ramdeo, if somebody is very adventurous and he wants to put some money in mid caps because he is thinking that I'm going to look for value and I'm going to hold on for the long term, would you suggest something that you think is driven by strong fundamentals, good management, and it's a mid cap that will become a large cap for someone with patience?
No, first thing is I would not recommend anything in this kind of situation. And it's a lot of work to identify an idea. And I mean, as far as we are concerned, whatever ideas are there, they're all disclosed. You can go and see our portfolios, the mid-cap portfolios in Focus 30. And so those ideas are all disclosed in public. I would not like to pick one or other, because it becomes very difficult, because some of these ideas have run up quite a bit. And in the shorter term, maybe in 12 months' time, some of these companies may actually not do well. Maybe on a 5-year basis, they'll do very well. So you have to, and the ones which are likely to do very well and they are low priced and which have a lot of potential, we are still buying. And I would not like to discuss those companies till it is fully disclosed in the portfolios.
Okay, amongst the names, mid-cap names disclosed in your portfolios, can you talk about a few that investors can consider to put some money in?
No, I think it is not right because it's talking to your own portfolio. I would rather request the people to go to the website and look at the stocks and pick up themselves, because we have a lot of regulatory issues to talk about the stocks.
Ramdev, totally understand the regulatory issues. But, last year, same time, we got a listing, Interglobe Aviation, which, you were quite bullish on. Not taking any names, but you think aviation is becoming a consumer pack rather than more of a cyclical pack, and that's why it's looking interesting. So would you still be bullish on the aviation pack? The numbers that we are getting of the passenger data still continues to look good. So is it interesting and a better play versus the traditional consumer names like HUL, ITC?
Yeah, clearly, see, it's a fantastic consumer cyclical. It's a cyclical as well as consumer, and a growing cyclical consumer. So we have amazing opportunity in terms of growth. But, globally for a very long time, aviation has not made money. Incidentally, right now, all the airlines all over the world are making bumper amount of profits. So right now, it's going is very good because oil prices are very low. Oil is about 40% of the entire ticket cost. And in India, not only the margin is there is a growth also. So, this is a very unique opportunity. But the nature of the business is, a lot of fixed cost is there. And if you fly for some time empty aeroplanes, 100 flights, profit will go away in just 4 or 5 empty flights. So I think one has to be extremely careful. This is not a category where you can buy and hold, and and you cannot allocate large amount of money. So I think one has to have modest allocation, and it's a cyclical, consumer cyclical, and whenever there is excess in the valuation and all, one must book profits also. But I think I'm quite bullish about Interglobe Aviation, and they seem to be doing very well. Let's see. This is one of the weakest quarter in September. How well they fare compared to last year?
Right. How would you look at the NBFC pack since April? Since the results have come, rates have fallen further. NBFCs have done particularly well. Maybe NBFCs as well as private banks. How would you look at this sector? Despite the valuations, there is still the growth outlook which continues to be strong for these names?
Yeah, they will remain very strong depending on which company you're talking about. And it all depends on the strategies of each and every company, how well they have strategized, because opportunities are there, and there are a lot of competition which is not that competent. So the area is very large. The people who are competent, they can pick and choose the customers or the market share, and hence they can grow very rapidly. So we are seeing some very interesting fintech kind of NBFCs are coming up who can do millions of customers every quarter. So it's a very interesting space. I think a lot is going to happen here.
Right. As far as the earnings so far is concerned, again, not taking in names, but large cap IT has not done well. Probably a little bit of pharma company that has declared has not been that great. But some of the other names like Adani Ports, which were not expected to do that well, did particularly well. So is the composition of earnings for Sensex or Nifty changing?
Yeah, so I think the top 10 companies are not doing that well. I mean, you have Reliance, you have TCS, you have Infosys. So quite a few large names are not particularly growing very rapidly. So that's and they have large weight in the index. So that's holding back the earnings growth for the index per se. But I mean, even valuation of these companies are also low double digits kind of thing. I mean, if the index is at 18 times, these companies are trading at 12, 13, 14 times. And they have very large franchises. And so it's very interesting time. I mean, I don't remember anything like this where top companies are trading at a lower multiple than the tier 2, tier 3 companies trading at multiples of the index multiples.
Right. As far as cement is concerned, again, that's a sector which a lot of people look quite closely. Again, numbers were not that great, but the valuations of these cement companies continue to look strong. So again, the market is just telling you that they are ready to pay this price for a better outlook going ahead?
Yeah, but whenever you pay too much of price for anything, even if it is a great company, the return becomes very mediocre. I mean, if you pay $300, $250, $300 for cement capacity, at the end of it, a ton of cement can earn that much only. It's not that you can charge unlimited price. So I think, but then it has surprised in the past, because what happens is that these companies are going from say 20p to 30p, 30 to 40, 40 to 50, and whosoever said that it is expensive at 30p, he is looking like a fool, because at 40p the stock has done actually 50 times growth. So but then prudence will prevail at finally, and in cement replacement price, I mean, if it is $150, then if it is very efficient, maybe you can pay $200. But paying significantly higher premium on that, it doesn't make sense to me, to best of my understanding.
Ramdev, just a last word. Do you think markets will hit new highs? What are the triggers for somewhat 2073?
Everything is perfect for new high, I can tell you this, in the sense that you have low oil prices, fiscal under control, current account under control, rupee dollar very, very stable, money pouring in from all over the world. India is the iconic destination for all the countries. And more, we have leadership which is extremely aspirational. So everything is right for India. Just that global growth, local growth, it must just fall in place. The investment cycle or some kind of consumer demand, I don't know. It might be just few months away. I would think that market may surprise us in next 12 months on the upside.